right, let me share my document. Before that, let me see if is there anyone who is joining here for the first time? Any new joinees here? This name seems to be all familiar, so I guess the regulars. All right, so let's get going. Ramesh is let's play. Yes, we will play today. I thought maybe do some fun stuff today, and that's what I thought I'll we'll have a game. It's basically an investing bingo game, but for that, yeah. So let's start. For that, you need to be accessing the Optalyzer URL. So if you do not have access to that yet, just let me know with your email ID. You should have, everyone who was on a wait list should have access to it. But if you don't, for whatever reason, because I did send out emails to everyone. So for whatever reason, if you don't have, just share your email ID saying, hey, this is how you registered, and we'll get going from there. Okay. Or if you are already, let me just see. Or if you don't need to sign on a wait list, or if you're already signed up or registered on optiongig.com, just let me know your email ID. I'll enable you for Optalyzer, and then we can also play the game. All right, so let's start with our regular stuff first. Okay, let me know what you guys are seeing. Let me open up the chat. Okay, make sure I see all the messages. James says, a meetup title is Celebrating American Capitalism. While it serves mainly the 1%, let's cheer for it. It serves 1% because maybe they work the hardest, but the doors are open for everyone, right? And I have seen people, I mean, myself, coming to this country and making a living for myself. I don't think every other country will give opportunity to everyone to become what they want to be, right? And there will always be limited space on the top. Doesn't really matter what aspect of life we are looking at. There will always be limited space at the top. But this game or this life is open for everyone. You want to win, you're allowed to. That's what I want to celebrate when it comes to American capitalism, right? Open market, everyone is allowed to win, everyone is allowed to participate. If you don't want to, because you want little certainty, sure, then but then you also do not progress the way others have. So I don't envy those 0.01% sitting on the top, or trillionaires or billionaires. I use that as an inspiration, that they were not handed, they were not born with silver spoon, they were not given handouts, they worked hard for it. And in this country, if you work hard for it, you can succeed, right? You don't have to necessarily, it's for me, that's my lesson that I've learned here. You can derive whatever based on your experiences. I've been grew up in another country where not everyone has an equal opportunity, but really love what this country has to offer. Okay. All right, so let's start discussion number 328 on our Independence Day. Celebrate American capitalism. Will probably, yes, I'm a big fan of capitalist and capitalism, because it allows, like I said, it allows everyone to, provides opportunity for everyone to grow. Socialism hasn't succeeded, has been tried many times, hasn't really worked out. in any part of the world, right? So today, like I said, I'll go through macro, probably give you update on portfolio, and also we'll play some games.
Vivek,
Yeah, go ahead.
sorry for not raising my hand, but what I saw in China, when I lived in China from 1997 to 2008, that was a lot more open capitalism. It had less. I mean, even the Shanghai I left had a lot less rules and regulations, and so therefore, uh, their product cycle was a lot faster. Yes, they did steal stuff, but they didn't have any that many rules and laws, and also the minimum wage was a lot lower.
So I've heard of some of my friends who are of China, who grew up in China. They have a very different story to tell. Of course, I mean, probably, like I said, there were fewer rules, so government could do things faster, quicker. But then there's a lot of control by the government, right?
That's true, but what I've been saying for the past 10 years is the U.S. is on the uh, down trend. Like for instance, 7 years ago, I was totally surprised that Huawei did have its own OS and own chip. I thought because everybody was telling me in China that they own the whole 5G or is it 3G 5G spectrum. But then look how quickly Huawei
So
within 3 years develops its own OS and its own chip.
yeah, I agree. China has been progressing really fast, but in terms of still, I think US still, as of today, and I agree that US is not as great at what it used to be, especially given what we've been doing across the world. But as of today, it is still, I think, if not the best, one of the best capitalist society to live in. Right. We still have the best companies here. We still have the best capital market here. We still have the most of the investments coming in US, right? Of course, exchanges in China, London. London has been trying hard to attract capital, haven't succeeded it, right? They tried all EU stuff, etc. That experiment failed. China's Shanghai and the Stars stock exchange, that is and the Hong Kong, they are growing up, but still a lot, far behind where US currently is. Future, nobody knows, right? What's gonna happen? Um, Maybe we'll see de-dollarization and influence of US as the economic superpower will win. Sure, right? But I'm only talking about as of today. I think we are still the best society. If you want to win, I think everyone has an opportunity to win. That's what I want to say. It doesn't take away the progress that other countries have made. Right? I have seen India, the capital market has grown a lot from when I was going to college, and now my nephews and nieces, that now they are working. There is a stark difference. Now the stock market has become a lot more open than what it used to be, but not really where still US is. Right? There are some stuff on stock market in India which is even better than what we have in US in terms of the retail participation, etc. Right? But still, the overall, looking at a overall capital flow, still the most of the capital still comes to US. Things will change. We'll change our opinion. All right. So yeah, we're gonna look at little macro, and then we'll play a game. For playing that game, like I mentioned, you need to be registered on my website. So if you have already registered, Just let me know your email ID, and I'll make sure you have access to play the game. Okay. Once again, this is the URL, and then let's get going. So at a macro level, we did see a little bit of a sell-off on AI front. A lot of the hot stocks like SNDK, Micron, they cooled down a little bit. Whereas we saw a little bit of a rotation back to those companies that were given up for dead because of SaaSpocalypse. Somebody rotated into that. Again, I think there was a news around Meta. Meta, let me ask you a question. So Meta came up with the news on that they are opening up a new business unit. I mean, Mark Zuckerberg had hinted it earlier also in a previous earnings call, but this time we got a little more concrete information. They actually had a person who's going to lead all that business, which is Meta's cloud business, right? So they will basically be offering compute capability to other companies who basically wants to get access to NVIDIA GPUs and all the compute capacity, etc. SpaceX did the same thing, right? So first, on day one, market cheered it up. Meta stock was up 10-11%. And then the next day, the stock sold off maybe around 5%, whatever, around 4-5%, right? What do you make out of it? Before we get into macro, let's talk about that, because that's a hot topic in the investing circles, is around AI and all the billions and tens of billions, hundreds of billions of dollars that the companies have spent in building up the AI capacities, right? Compute capacity. And now they are saying, ooh, okay, we are ready to rent it out to others, right? Are you ready to rent it out to others because you can't find a use for those capacity in house due to build it too much? What do you think? I saw the same case with SpaceX. Right. James says that guys, yeah, GPUs are lying unused. They are scaling back on AI data center investment. Carl says same stuff, excess compute for rent. Says over invested in data center. Is it only Facebook or Meta's problem? Or do we think it's happening across? Because there's a lot of that the market returns this year has been based on all the companies that basically sell it to sell products related to building these compute capacities. Is it an industry-wide phenomenon? What do you guys think? I know SpaceX also reached the same conclusion, saying, hey, we're gonna rent out the compute capacity to others. To me, I think I think whatever Carl and James say, I agree with them in terms of maybe you overinvested it, and all the, I think, projections that we had, that or all the narrative around there is no compute capacity, or we need as much compute capacity to as we can get our hands on. There seems to be some cracks in that narrative now. So if you're really short of computer capacity, why are you renting it out to others? Why is it? Why if SpaceX wants to address that $27 trillion TAM, then they should be using all the compute capacity they have to build the whatever best AI models or whatever the thought process that Elon had to capture that TAM. Why are they now, selling it out to others, their competitors like Anthropic? Right? So it's like companies coming and telling you we have an insane demand for our products and we need to basically build tons of factories. We need to buy all the machines. And then when they build in the factories, they say, you know what? We're going to rent out our factory to our competitors. What? You said you have an insane demand. So renting it out to whom now? Why are you renting it out to your competitors? So I don't know, but that does give me a pause for, a little pause and a thought on all the narrative around there is an infinite usage of all the computer capacities, that whatever we can build out, the whole narrative from all the hyperscalers and metas and the SpaceXs of the world, seems to be some crack in that. And that makes me a little bearish on all the neoclouds, right? Neoclouds like Nebius, CoreWeaves, Crusoes of the world. Crusoe, I think that's still private. CoreWeave and Nebius are public, because their whole business model is based on the fact that these hyperscalers and metas of the world cannot build capacity at as quickly as they need it, and hence they will be renting out that capacities from these neo clouds. That doesn't seem to be the case. Anyway, I think I don't own any one of these companies, but I guess the stock price did saw a dip when this news came out. James is saying that watch the private capital. They are the canary. They are the largest investor in AI data center build out. Right? Yeah, that is true. And not just private capital. What I'm also afraid of is are these also gonna affect the finance? Will it gonna have a bigger impact, larger impact on overall financial system, right? Even though government tried to keep the banks out of it and not basically loan money to these private projects and let the private creditors do it, like KKRs and Blackstones of the world. But a lot of banks could have lent money to the KKRs and the Blackstones, which we have no idea how convoluted or how this spaghetti is, right? That's what will be I'll be a little scared about. If one of these private credit lenders go belly under, sure. But what we don't know is how much of the bank's capital, regular bank's capital, is tied with these Blackstones of the world. That's going to be a little scary. Carl says MU at 80% margin says poor planning. Carl, could you elaborate? Is it poor planning on hyperscalers front, meta front, or on MU side? Can you elaborate on your comment? Okay, hyperscalers.
Vivek,
Yeah.
one thing, I think it makes sense for Meta to come into the cloud business because this is that like one of the Max 7 who doesn't have that. And if you look at the business wise, all of these big enterprises, they already do have this internal business where they are renting it out to internal teams. So opening it up is a zero cost for them. Like opening it up to external is going to be a much more beneficial in a long run. And I don't know what happened in the last infrastructure cycle when internet was built, but any of these build infrastructure cycles, somebody has to start building at a large scale, and to handle the cost of it, they need to somehow get the intermediately like get some funding from other sources. So I don't think other hyperscaler will buy it, but there are like lot of startups, lot of mid-sized companies will be able to rent out this space. Otherwise, they can't afford to build all these things.
I agree. And that's what I think Zuckerberg was saying is he's seeing demand from his customers, but now you are moving directly into in competition with Googles and Amazons of the world, right? Do Meta want to be in this space? That's the question. Is it like, hey, because opportunistically, since my GPUs were not being used by my internal teams, and hence I am lending this out? Is that the case, or is the case is Meta wants to become a part of wants to compete in this space against Google and AWS's? Because if it is the latter part, right, from a long-term perspective, maybe okay, but then in a short term, it's going to be a huge investment that is required. That's my case. I don't know. Maybe it's the former one, in which, hey, I have unused capacity, and hence I want to rent it out to others. But yeah, you're competing against the very deep-pocketed players in this case, right?
Like, can you explain me like why it is a cost, additional cost? Because if you have the infrastructure to do it already,
No. So my
like,
idea is if you want to make your compute capacity as one big business, right? Then you have to compete against the incumbents, which is AWS and others, right? And
but
they're not gonna sit and quietly and let you take away their market share.
isn't it like the newer player already coming in? Even though AWS is the market leader, GCP came in, Azure came in, now Oracle is there. There are like more cloud provider coming into the market, and
Yeah, but
they are getting the market share.
market share is okay, but the question is how about the margin side of the work, right? So to get the market share, Meta will then have to discount it against these players. And sure, they can show some revenue growth, but the question is it, can they run this business profitably? That's my concern. You're trying to know, Meta is trying to move from a social media where they had their own mode into a business where there are already established players, and this is a capex heavy business if you really want to win in this. Otherwise, to win in this, you need to build a capacity, and competing against price with these big hyperscalers won't be easy, right? And Oracle has been doing it. Look at the Oracle's balance sheet. Right? It's like has gone upside down ever since they started to build these capacities, right? And we think there will be a space for more than 2, 3, 4. The question is how much of these big players can market bear, right? Maybe 3, 4. Like IBM going to do it. Will Meta be the next one? I don't know. It seems to be a little shift away from what Meta has traditionally been doing, and it's getting into a space where there is already well-entrenched, deep-pocketed players. Now, if the narrative is the first one, which is, hey, I had an extra capacity available, and hence I want to rent it out, and I'm basically targeting Nebius and CoreWeaves of the world and take away business from them. Sure, I agree, but then that basically causes a concern on the other side, which is, dude, all the projections of the AI and the compute usage and all the rosy projections that we got from many of these companies in terms of how much of a AI capacity they need internally, have those gone wrong? Right? So I don't know. We'll see what Zach does. Anyway, that was an interesting story. I still haven't figured out what to do. Or I mean, I still hold Meta shares, but I don't think I'm gonna add more to it until I get a little clarity on this move. Is it like more of a defensive move, or is it more of an offensive move that yes, I want to build this as a separate business line altogether? And Zuck is known to pivot into many things, right? So maybe he wants to now pivot into becoming one of a hyperscaler. Who knows? But that's going to be a big business. I would say a pivot from his side. Okay. All right, Sam, you have your hand up. Yeah, go ahead.
Um, remember when I brought up, sorry, I didn't say Facebook. Well, now we have these two things that that happened. So I don't think when I brought Facebook to you a few months ago, um, the people who were figuring out, sorry, the valuation, I think they were incorrect because number one, Facebook was a couple months later was declined from the purchase of the China company, and number two, this. So, do you think uh, perhaps half a year ago the uh, analysts were too optimistic?
No, see, I I don't think analysts were too optimistic because nobody knew that even though Mark Zuckerberg, he did say that if we have a spare capacity, we can always rent it out to others. But I don't think at that point of a time anybody thought that he's gonna do it seriously, because at that point of a time the whole narrative in the whole industry was, if we can consume as much as capacity as it is available, right? We have so much demand for our work. We need every last bit of our GPUs, right? And now the narrative has changed, wherein Meta is saying, maybe I would rather rent it out to it. So now, depending on, like I said, I don't know, it's an offensive move, it's a defensive move. Analysts probably will re look at it and reprice it.
Well, Vivek, what I'm saying is that the analysts didn't were not confident. They missed those two things. So we're trying. I'm kind of defacing the analysts.
I mean, that's okay. Analysts, a lot of the analysts miss a lot of stuff. Then over there also human. Okay, coming back to the on the macro side. So there are three key trends that will define how the market might behave in the second half. One is the health of labor market. This week that we had a labor numbers came out. It wasn't that strong. Economy added fewer jobs than what we were estimating for. The other one is energy prices, and that will determine where the inflation number goes. And based on where the inflation number goes, we will get what the Fed is going to do, right? Right now, Fed is divided. I think I have a number between Fed. We're looking at, okay, so this is on the inflation. Yeah, so Fed is like 9 are in favor of keeping the rates on hold or lower, and the 9 are talking about, hey, we should raise our rates in 2026. So right now, Fed is like half. We should maybe keep it where it is, or maybe we should raise it. I think market has started to price in a rate increase in December meeting. I don't think I have a chart for the latest Fed watch probabilities, but last week when we looked at it, that was the case. So if we get one rate hike should be okay. The market is already digesting that, but I don't know, if we get more than that, that'll be an issue. Kevin Walsh was in I think it was in Portugal, where there was a like central banks meetings, and a lot of journalists try to extract some future looking guidance from him, but he was very clear. He wants to reform Fed, doesn't want to give too many signals to the market. So I think market also have to adjust to this new reality that now we have a new Fed chair who is little different than what the previous Fed chairs have done, right? And he's of opinion that Fed has been oversharing it. You don't have to share in so many details and so many times, and we'll see. So that's another uncertainty. We have a new Fed chair, so we figure out how the markets react to that. Overall, so far in the monthly job gains, we have seen improvement, except in the June, it was below what the the expectations were. From inflation side, now we're seeing with the crude prices coming down, right? Inflation has started to moderate, but still it's been above Fed target of 2% for now 3-4 years. I don't even know why we keep a target at 2%. We haven't never been for the last 4-5 years. It's been above 2%, right? Since we had COVID, it's been above the Fed target. And I won't be surprised if Kevin Walsh comes and says, you know what, we are abolishing this 2% target and give us a new target, which is higher than 2%. What do you think? That will be bullish for the markets? I hope that is going to be a little bullish signal, but we'll see. Nobody knows what Kevin is going to do. What else did we see in the market at a high level? Yes, that's on the sector wise. When the tech was little weak, AI was little weak, we saw financials did well. That was the best performing sector for this week. It was up almost 4%. Consumer discretionary healthcare have continued to be strong, right? And energy prices is coming down, which is, I think our president wants even lower prices. At the pump, we haven't seen much of a difference at the pump just yet, because I think it will take a few months, maybe a few weeks to a month for the prices to reflect at the pump. But in an energy commodity market, the WTA and the Brent crude prices have come down. That's what's on the sector wise. And still looking at a year to date, still okay. S&P is close to 9%. This includes, I guess this does include the dividend. The best performing, even with the decline this week or the last 2 weeks decline in energy prices, the best is still energy and industrials, right? And then comes the information technology sector. Only one sector which is still in red is consumer discretionary sector, right? That's still down 1%. But overall, it is so nice to see this broadening in the market, that it's not just the tech, it's not just communication surveys that is working, but if you look at healthcare has been up 5%, staples up, financials up year to date, barely though, because financials only started to catch up in the last 2 weeks. Energy is up 18%, industrial up 18%. This is a better market than, tech up 25%, and then we say like 4 and 5 sectors are in red. James, is this still valid? Shiller Cape ratio almost 40. Right? It's only time will tell where we go from here, right? We have looked at this Shiller Cape ratio many times, and whether 39 is higher or whether we're going to break at 40, 45, who knows? But it does point out that, hey, the S&P is not cheap. But there are other sectors, like not every, because S&P has become concentrated, right? It's concentrated. A lot of gains are driven by a few particular theme, right? And that's why the Shiller Cape ratio is so high. But then there may be other sectors in which the capital could rotate if we see a weakness in those high valued or high PE sectors or the companies. Okay. So I have no idea when this, whether the Shiller PE ratio is going to break the market if it goes above 40, 42. All I want to do is make sure I have a diversified portfolio, and if that means you are lagging behind S&P for this year, I'll still be okay. I just don't want to invest in super expensive but not great businesses. I don't want to hold those in my portfolio. But some of the companies, some of those companies, the stock has done wonderfully, right? SanDisk is up like 600% or whatever, 400% for the year. Not the best business from a business economics perspective, but currently there is so much demand that it is driving. Look at a Micron. Some of these companies have driven up the gains of S&P. I mean, they contribute a lot to the gains of S&P. I don't know if anyone has a different thought, please share. What else you guys are saying? I'm hoping that market will correct so that I can add more to some of stocks that I do want to, but we'll see. I have no idea. So buys and sells this week, right? So I bought. I had a short put on FXI. That got assigned, and I do want to hold it in portfolio. If you really look at a Chinese market, that's been lagging for this year. That hasn't done great, and so my overall the exposure to China or Chinese stock as an overall portfolio, that has come down. So I don't mind holding this in my portfolio. Second thing which I actually bought, it's been after a long time I actually bought the shares deliberately, was an ETF in Ethereum, ETHA. So I bought shares of ETHA. It's almost at a 67% drawdown for this year. And, we talked about what's been ailing some of the crypto market last week. We looked at, some of the headwinds around crypto market. And that does show up in both in the prices of Bitcoin as well as in the prices of Ethereum. And I guess on the prices of all those big, the top coins if you look at. So now you're looking at Ethereum, it's like 1 year is down 33%. You look at a iBit, the picture is not pretty. Year to date down 30%, 1 year down 43%. But I was looking at ETHA. It's now was sitting under like almost 66% drawdown. And if you're on a crypto, there is a like for traditional stocks, we look at among other indicators. There are some indicators that people look at is RSIs or your exponential moving averages. Pick up whatever your indicator is. One indicator which I generally look at on a crypto is MVRV score. And over the years I've seen that if it goes in negative zone, that is generally a safer place to buy, and probably should be looking to sell if the MVRV score is like 4+, right? So Bitcoin wasn't still negative, so I did not open anything on an iBit, but I did see ETHA moved into negative. Not saying that it cannot go further down, but generally looking at the history, that's if not the bottom, but it does indicate closer to the bottom prices. Now, if your future outlook around Ethereum or any of these is like, hey, these are useless stuff, don't even touch it. That doesn't matter where those indicators are, right? I am still bullish on some of these use cases, and I was looking, hey, if it is available at really at a price point where the risk is far less, I will add you to my position. So that's the decision I took.
So I have a question. Okay, so for a few years, the thesis of Bitcoin people was that it'll act as a hedge against the broad market. Last 6 to 12 months have proven that while the S&P went up 20%, Bitcoin actually went down 20%. So it's like a Texas hedge. Uh, so the question is like, what besides the fact that you think there will be mean reversion in the price series of Ethereum, what bullish catalyst do you think will drive the damn thing up when everything else is going down?
See, I
if,
am
if the stock market goes down, it'll go down further. If the stock market goes up, it doesn't go up, but it goes down, then why would the heck would it ever go up?
I'm not looking at on the pricing perspective or what's better. All I'm looking at is what's the other players, the bigger players in this space are doing, right? They are still continue to create products which are based on Ethereum blockchain, including BlackRock, etc. They are moving some of their own bond offerings, etc., on blockchains, and they are still using Ethereum as a blockchain to do it. I know Hyperliquid is also coming up in a different use case, but from a for those who are using this for the different use cases, I do not see them pulling back in usage of Ethereum, right? Or them yet changing their thesis around, hey, I think we're going to use this tech, or we don't want to use this technology, right? We're already talking about tokenization of our securities, right? And
So
coming
the use
from
of Ethereum, does it cause commission to be paid to Ethereum people or what?
no. If you have to use a basically if you need to run and do the transaction on Ethereum blockchain, you have to pay a gas fee, right? Which will be in terms of ETH.
I see.
Right.
Okay.
So if you want to play in terms of ETH, it means you need to hold that ETH. If I'm a BlackRock, etc., or if I'm any other business who wants to make use of this blockchain, and then I want to record a transaction on Ethereum blockchain, then I need to, along with the transaction, you also have to spend some in gas fee. The gas fees, over the years, the gas fees have come drastically down. And that's why we expect that, it'll, again, we are very early in this phase in terms of real world asset tokenization with or a stocks tokenization, etc. So any other chain could also win, but my reading is as of today, Ethereum is still the dominant chain on which most of the Wall Street players are building their solutions on. Right? So, and the fact that it was at a 67% drawdown, and the fact that the MVRV Z-score indicator flashed in a buy zone, I thought maybe, the it's a lower risk to maybe add to a position. Right? Nothing more than that. Yeah, price-wise, it's been pathetic. And you're right that the narrative continue to change. I have seen Ethereum narrative and the Bitcoin narrative continue to change over years, but those narratives are defined by traders who want to, who are focused on pricing and say, okay, I need to make money on this one. I also want to look at those who are building solutions on this. Have they paid back? What are their theses? Are they still continue to, invest and build on it? As long as if they do, yeah, then pricing will take care of itself. And if the thesis doesn't work out, or if you think that hey, this we will never gonna adopt these technologies, and this thesis just don't work out, yeah, then just don't invest. Right? I'm
But the thing
still
was like,
positive around the thesis.
so until Trump came to power, like the big thing was, okay, he's gonna integrate the whole Bitcoin sphere into the traditional the thing, and IBIT got born, and yeah, I was convinced that yeah, perhaps Bitcoin will get the fillip from this forcible connection of the fiat system to this damn crap. But monopoly system is being discredited because it hasn't acted as a hedge. People don't trust it as the stock markets have gone down. It has continued to go down. So I don't know.
Yeah, I mean, just continue to
I
go
don't
down
see
because
any catalyst in the next few years. I don't see what will drive people into Bitcoin if they've lost trust in this manner. Think about it for a second. All the connection business which they needed to force of the fiat system to this has been done. What more can they do?
we still have a Clarity Act that we haven't passed. If that doesn't get passed, I think right now the next date is maybe July, and doesn't get passed, then I have a huge concern on this.
So the
Right?
clarity thing will not affect the Bitcoin price, right?
So it will basically provide in terms of actual clarity on who can do what, right?
Okay.
So today there are a lot of players who are not even coming and playing in the market because they don't know what is commodity, what is security, how do we play it, what rules and regulations we have to play with, right?
Mhm.
They are just sitting and waiting and watching to see which side the administration and what the rules that how what the rules of the game would be. If the Clarity Act is passed, and hopefully not the way how Jamie Dimon wants it to be, then I would see that there will be a lot more players who might come into this, right? So, for example, there is from a tech side, a lot of these banks are already have the tech implemented in which you can go and buy Bitcoin on your bank from your bank website. But today they
Right.
can't offer it because they don't know how it's going to get categorized, and are they allowed to play, not play, and all that stuff. So some of those the plumbing work started in 2021 itself, when FIS and all of they started working on it. When we saw BNY Mellon started working on the custody solutions, right? JP Morgan had its own separate division, which later on they sold it, on working on this technology. Master and Visa are already playing on this one. So I'm more focused on the use cases and what's happening on that front. Uh, Last few months, it's a micro strategy which is causing a lot
Yeah,
of concerns around it, because
exactly.
one big player which always had a had a provided a bid. Now that if that player turned out to be a seller, then who else is going to buy it, right?
It's in a margin call position and being leveraged 9 times. It is going to be causing a bigger vicious downturn in Bitcoin price.
Yeah, I think this space people have seen a lot more bigger swings anyway. So we'll see. That's why it's a moonshot bet, right? Moonshot bet means don't bet your food money on this one. But if it works out, probably it'll you'll do great. If it doesn't work out, you'll be glad that you didn't put your food money on it. It's all about position sizing, especially on these which are it can go to zero or could become 10x or 100x. All right, here's a quick update on portfolio as of end of June. SPY is still the biggest position in my portfolio. Google's, I think in between SCSD was number 2, but then Google maybe Thursday, whatever, went up, and now Google is number 2, SCSD is number 3. I'm so glad to see this at number 3. This is a lot more diversified position in portfolio, and then so on and so forth. It seems there's still a lot of a chip exposure in top 15. Got a ASML, TSM, NVIDIA, QQQ, of course, Google. Well, that's it. That's on top 15. Any questions on top 15? Can you also show portfolio performance? That doesn't help. I think earlier I used to talk about performance, but then I realized that doesn't help anyone. And neither I am I ask anyone's performance, because you don't know what kind of a risk is someone taken to get that performance. But the performance is, for me, the way, and I think you should rate your performances, does it meet your financial objectives, right? If your financial objective is to beat S&P 500, sure. My financial objective is not to beat S&P 500, but to make sure that I have a capital available when my bills come due, right? And in that case, and for that, if I were to for some year, if I were to tone down my risk because I know some bigger expenses are coming up, sure, I'll be okay to not beat S&P 500. But having said that, this week I did implement ROI calculations on Optalyzer because I've been doing it for now, tracking for almost 8 years on my Google Sheets and all that, which you guys know I don't want to do. So slowly and steadily, I've been moving everything on to Optalyzer. So I did implement both methods, time-weighted returns as well as a dollar-based returns to track my performance since I think my first time when I opened the option trade was 2017 till end of June. So I know what my performance is, but all I'm saying is any number I give you is not going to help you, right? What if I said, hey, you know what? Over the last 5 years, I've beaten S&P by 10% alpha. That doesn't help you. You don't know how much what they beat the 10% alpha. Maybe I've taken a risk and I was just lucky that I didn't get washed out. It's like trying to say that I reached my target half an hour sooner than everyone else. But what you don't know is maybe I jumped a few red lights. and if the time would have been different, I could have gotten killed. Right? So that doesn't help. And that's why you shouldn't get either motivated or don't compare your performance with anyone else, because number one, you don't know what they have been working towards. Number two, you don't know what kind of risk they have taken to achieve that performance. Right? Now I will focus or start to reduce my risk a lot over this year. I did not buy anyone on MU and all that stuff, right? I don't want to get behind momentum. I want to reduce risk. If I can make 10% on an average, I'll be pretty happy. My bills will be paid. I don't have to worry about anything, right? But yeah, that's the story as of now. But I did implement everything, and I do know what's the performance, or I can find out by picking up between dates what's my end performance is. How do you evaluate your risk, right? From a risk perspective, now I have so when I look at a risk, I want to look at from what kind of businesses do I hold in terms of their demonstrated quality over the past 10-15 years. So against each of the holdings that I have, now I have a quality score against each one of them, right? Now it is possible that a lot of high growth companies and some of the stocks that have done well in this year, but they are not that great businesses. That it's all about future narrative, right? And since now I have a ROI calculation, looked at it in what I've done in 2021, 2022, right? 2021 handsomely beat S&P because you have those high growth companies. And 2022, you basically, you've been beaten a lot by S&P because a lot of those high growth companies sold off. Of course, at that point of a time, I did not have a way to do a quality score. And I wasn't that as educated or as learned as I feel I am right now. So I did my own mistakes during those days. I don't want to repeat those mistakes, right? So against every holding that I have, I know how good the business is, and the stock price is, is defying its business quality. It is because the narrative about the future is great. Then I need to know how much money I want to put in my portfolio, which is driven only by future narratives. And I'm not God. I don't want to play God. I don't want to put a huge portion of my portfolio only based on future narratives. Maybe those companies turned out to be great. Maybe each one of those companies could become Amazon. But I don't know future. So I want to make sure that majority of my portfolio is holding the companies that have a demonstrated capability of managing their business in in a sensible way, right? And depending on how the market is, if the market is euphoric, those stocks won't do that great. But if there is a concerns in the market, you will see those stable stocks outperform the growth stocks, right? So that's how I look at it. I look at into what kind of businesses do I hold. Super tech heavy, actually, I'm really diversified. I do own more tech because I understand tech more, but these are all my long positions. I also continuously try to reduce my deltas by selling calls on QQQs. I do not own, if you really look at it on the tech side, so Google, we consider as a tech company, but it's actually an advertising company. It gets more impacted by how the economy will be than anything else. Their tech revenue is actually Google Cloud, which is what, 16% of their overall revenue, right? This is not tech. This is not tech. This is retail business. This is tech. Meta is a social media company. Apple is a consumer electronics company. So, but what you could say, these may be correlated to each other, but that's how I basically focus on overall deltas and management deltas with that. Andrew says, looks like triple SPY plus QQQ plus MF, Google looks like triple Google weight. So I can actually find out what's my overall weight is. We have an optimizer where you say it will break down your S&P SPY into individual components and then add it to the Google positions and all that stuff. I don't think I've looked at that yet, but
I can explain. For example, Google is 6% here, plus SPY has 6% Google, and QQQ probably has like 10% Google. So overall, like 25% Google here.
Not really. Hold on, just let me do that right away. So I can do.
I just did quick rough math.
Yeah. So there is something called telescopic view. Maybe I should rename it as a microscopic view, which and I know what I had asked these questions myself, and that's why then I built this view in which it will go into the individual ETFs, pull out top 50 holdings of those ETFs, and then see if I already hold it, it will add. So now,
well, I guess more question, why hold them separately? Like SPY already has Google, why hold Google separately?
Yeah, SPY already has Google, but then the percent of the Google is less than. And I agree with you. I am actually more now inclined to have more and more into SPY and QQQ and less into individual ones. But it will take time for me to sell these and move it to the ETFs. But I held it. These have worked well for me. And I just need to sell it considering the tax impact and all that stuff, right? So now I'm looking at, if I look at my overall, the pure play S&P, it means not holding anything. If I strip out everything else that I hold in my portfolio, is 7%. So rest of the, I would say, or 8%, the rest 50% get subsumed under other tickers that I hold. Now, based on that, my overall, Google is still number 1. Mercado Libre becomes number 2. Meta is number 3. Apple is number 4. Meta and Apple tie at 4.5%. Yeah. So, wow, Lockheed Martin has jumped out to 4%. I don't own in a single share of Lockheed Martin. Okay. I'm glad that I have this
We are not seeing your screen, Vivek.
Oh, no, because that's my real account. I don't want to open it in the whole forum. But you know that in Optalyzer, you can go and say, okay, give me telescopic view, in which it will basically it will break down SEHD, SPY, QQQ into individual components, and then will add it into your respective holdings. So I did that on my personal account, live account, and now suddenly Lockheed Martin, I see 1, 2, 3, 4, 5. It's my 6th biggest position. I need to now pay attention to Lockheed Martin, and I know where it is coming from. It is coming from ACHD. ACHD has 4.82% of Lockheed Martin, and I think that is contributing. Okay, so I have a risk on Lockheed Martin, which was hidden so far. Let me see. Oh, okay, I got a Home Depot, which is on top 15. All right. Okay. I won't bore you here. I need to look at it to start tracking some more companies. This is a little question, is a surprise for me, that I did not know that these things were hidden in my portfolio. If I break down the ETF. So who asked that question? Thanks a lot. So the tool is this, right? So this is a demo account, so I can share. So if you go to portfolio, right? So this is, let's say, Google and all that stuff, right? I do have, let me add some SPY to it. Add a new trade, and then you'll see live on all. So, okay, without that, let's see, where's my portfolio percent? Okay. So we're seeing Google is whatever, 15% of portfolio. Let me add just stock says on first. I bought SPY, about 400 units of SPY, whatever, give me 720. I'm just putting some numbers. Save stock trade. Okay, let's do one more. And on second, I bought QQQ at 715 or whatever. Or what's the price for QQQ? Was okay, maybe 708. Oops, sorry. 500 shares and 708 price. Okay. I refresh this. So you do see QQQ is my biggest position. Let's say Google is number 3, 9.44%. But we all know QQQ SPY will hold Google. So what I want to do is go to a telescopic view. Now this is scanning all the other ETFs that I hold in a portfolio to tell you what the overall impact of that would be. And when I did it right now on my live account, I realized I own Lockheed Martin is my top 15. And so the Home Depot has also appeared in my top 15. These are the companies I never analyze the earnings, which now I should. Right, so now it's looking at Google is 10%, Merely is there, Meta is there, Shopify is there. Okay, we'll see. Let's add, I think what is broad. Oh, this is $30 or something. Now you will see should see some different tickers because SCSD holds some stuff that others don't. So basically, this is how I realized just now that I have a LMT and I should now review the earnings of LMT because it is in my top 15. It is in my top 15, which I did not realize. And so is Home Depot. So you look at a Lockheed Martin, But if I don't have this on, I would never realize that. So this is what I showed the portfolio. I have QQQ and all that stuff, SEHD, right? But the moment you look at the telescopic view, I realize, my gosh, Lockheed Martin is there. Now I see Amgen, which I never looked at individual companies. Now I need to go and look at my live account to see what other companies I need to track earnings for. So this is what I was referring to. Okay. What is the tool that you mentioned? This is something that we opened up for a watch list. Is it still open if you want to sign up for it? So let me give you this. Just sign up here and I'll enable it. Or if you're already have a user on optiongig.com, just let me know your user or your email ID or a username right away. I'll enable you to get access to Optalyzer. So please review the impact of Trump funds starting today. I think the numbers, how much is the amount? Maybe a few $1 billion, $4-5 billion, right? $4-5 billion spent in S&P 500. I don't know how big it's going to be impact. It's going to be a little positive impact, but given all the other stuff that is happening, it could easily be negated by something else. But if you only want to look at the Trump accounts, that will go live today. It should be positive for the overall stock market because you are having a fund which is going to buy S&P 500. Right? So that's going to be positive individually, in isolation. But there are a lot of other forces in the market. We never know what new announcement could come on Sunday or Monday that could impact the market. But I think that's one good thing that this administration has done is enablement of a Trump account. At least everyone, every newborn will get access to American capitalism, right? Shri, it's a beta. No, it is not beta waiting. So what this does is it goes to SEHD, look at the constituents of SEHD, and say, okay, 10%, let's say 10% of SEHD is allocated to, let's say, Lockheed Martin. I know it's 4%, but let's say for 10% is allocated to Lockheed Martin. Then it will look in my portfolio. If I already hold Lockheed Martin, it will add the resultant coming from SEHD into that number. If I don't hold Lockheed Martin, which is the case, I don't hold Lockheed Martin, then it will show me that, hey, Lockheed Martin is coming up in your portfolio, a new ticker, and it's at this weightage, and it will tell you where the source is, right? It tells you Lockheed Martin 4.82% coming from SEHD. So whatever I have, how many units of SEHD we bought? We bought what, 4,000 units? So that 4,000 units result in 226 units of Lockheed Martin, which based on the price of Lockheed Martin results in 5.7% of my portfolio. Now you guys gave me homework. I need to go and look at my real account and see which other companies I need to track.
Now, I was trying to find out the risk metric that Rajiv was mentioning about. Was it based upon the beta weighting or is that something different? And
Okay,
now,
so
how do you assess the Lockheed Martin risk assessment over here?
You said Lockheed Martin quality score?
Okay, so you go by the quality score of the Lockheed Martin.
Yeah, so once, let's say, now I need to go back and, because I don't hold Lockheed Martin individually, the quality score shows up on this one. Maybe on the other view, I should add a quality score.
So quality score is your invention, is that correct?
Yes, it is based on my
So
frame.
value at risk, Shri, is industry-wide, very widely used measure. and essentially it's an aggregate measure of the kind of riskiness of the entire portfolio. And you're right, on an individual stock basis, the riskiness can be assessed by simply looking at its beta, which is also available on Yahoo Finance. If you just look at a stock, it'll say, hey, Nvidia is beta is 1 these days. It's amazing. But it's basically as risky as holding S&P. But to aggregate all of these positions riskiness, what you do is like you run some, anyway, it's a bath is there. So yeah, so it's good to know what your VAR is, because with that you also know how much you can expect as a gain, not just loss, by holding it for that period. So supposing you've computed your VAR for a day, 1 day at 95%, and you know it's $3,000. Let's say you have $100,000 portfolio. $3,000 would be a good value. So you know that, hey, you look at the portfolio next day or 2 days later, it should be up $3,000 or $6,000. If it's not, then you have like a way to react and do more deeper analysis to what component is bringing it down.
So for the option rates, the value at risk, Sri, what I consider is in terms of how much of a open premium that I have. So, but for the stock wise, like Rajiv mentioned, market consider beta as a riskiness. I stopped doing that a few years ago. Beta is a measure of volatility. For whatever reason, Wall Street consider volatility as a risky stuff. I do not. So I stopped considering beta as a measure of risk a few years ago. I would rather have a bumpy, but I want to own a just if a bumpy stock price, but overall better return, the high return is good for me than stable but zero return. Like a treasury is risk free, but I don't want to own treasuries.
Right. No, of course. We can go into more deeper, but you're right. That's why it's both, because it's calculated as volatility on both up and down. Therefore, it accounts for both of those aspects. Yeah.
No, I mean, you can. I also look at okay. There are some thoughts which say only consider Sortino ratio, which only looks at volatility on downside. But I'm like, no, I don't want to consider as volatility or downside as a business as a risky stock price going down. I think it's a much bigger, deeper discussion.
Much bigger, much bigger.
I used to track beta. I used to consider that as a indicator of risk. But a few years ago, I started to ignore it.
I agree. Beta is like, it was invented in the 1970s by actually this, anyway. So
yeah. So I don't track beta. So that's why I had to figure out how do I track the riskiness of a stock, which will tell me on the risk of the business, how good the quality of the business is. So I came up with my framework, which basically you look in.
You can have a session on this assessment of risk if you like.
On this stock analysis, it will tell you what the quality, the score is, right? So, and it is based on a lot of these framework. Anyway.
Right. If you can send me a link of whatever that risk assessment way of looking at it, I would like that. And I agree with Vivek, beta weighting is it's a way of looking at your portfolio. What is the possible downside effect, but not necessarily helpful to a great extent in the long run.
It is actually helpful in the long run, but it's not understood well. So that's why I'm saying maybe an illustrative session is better. I mean, you can always find links on VAR, but they'll be very technically inclined. Like they'll be showing the math of computing it and all. But in practical terms, when you're sitting in front of a portfolio of money, how you're gonna use it, that's where the whole thing comes.
I mean, I think Sri also beta weight his portfolio, especially those who have been in options. We always beta weight my portfolio. I know in terms of what's my beta weighting, SPY or QQQ beta weighting of my portfolio is, especially the one on Think or Swim or Tasty Works, right? You just need to go and give a taker how you want to beta weight it.
What do you mean by beta weight? Is that actually computing the entire value at risk?
No. Sorry.
Option has a leverage?
No. So basically, that is a beta weighted delta.
Right. So, and what I'm saying is like, okay, I think I put a note in your chat that most people who have, say, let's assume I have a portfolio of just simply stocks and cash. Then the volatility or VAR is X. So VAR is essentially an extrapolation volatility. Now, if I add positions of any kind which have options and futures, The VAR goes, it's bigger task to compute, first of all, and also it goes much higher. And so folks don't realize that, and they play with options without knowing the riskiness is higher. So in the last 2 weeks, those people who have options, I think they've seen some good lessons come in. Right. Anyway, you would probably have been handed stock which you would have been assigned to you, and now you're wondering, why did I sell those puts and so on.
No.
Rajiv, sorry, Rajiv, you have to take into consideration the correlation against your portfolio. What stock is, going to be up, whereas
That's
the
what
other one
that's what
going to go down.
that's what the portfolio VAR computes. So it will compute, say, let's assume you have 10 stocks and I have like two put options sold on it. It will compute the value at risk, taking all of them into account. So it takes the moves of those stocks over. Vivek is right. My disagreement with this whole VAR thesis is like it's looking at only time as the risk element as of the past and not any other element. So the riskiness comes on not just from time, but also the exposure to the kind of world you are exposed to. So semiconductors, for example. So in any case, like the point, Shri, is like it does take into account that if you held some stocks which were moving negatively to say Micron or SanDisk or Seagate, which you got assigned, you still got more risk when you added options to it.
Yeah, but when you're selling the options, you're reducing the downside risk on your portfolio. So that's another way of looking at it.
Okay, let's
Yeah,
worry about.
Yeah, this is much deeper topic. In fact, I also, and I think Rajiv, you brought up the VAR I think last year. I also, try to dig deeper to find out. But then I realized on the option side, I think the most of the literature on the options was mostly around how much is the premium that you are still open. You consider it as a VAR, but on the stock, it's a whole new game. And for me, at least for me, looking at available buying power and portfolio weighted deltas has given me enough information to know how much bullish or bearish exposure I have and how much of buying power have I already consumed. I.e., in case if the market goes down, do I run into a risk of getting margin calls, etc., or not?
So, I only discovered this whole thing called buying power or realized the significance of it just last week. It's amazing. So essentially, because I never used it, I essentially realized like you folks have been enjoying gains in capital by playing with this thing called buying power, which is essentially leverage. It's essentially you're saying that I'm not going to use just my cash, say 100,000, but a million
Yeah, my
because you have
portfolio value. Yeah,
sophistication.
of course.
So the point I'm trying to make with that is, okay, why did I, for example, not participate in that? Because I've gone through up cycles and down cycles, and you probably never gone through down cycles where you were shocked 10% in a day, and so your buying power completely eliminates. Essentially, you'll be margin called.
No, so that's exactly what I want to say. Is that's why I'm stay very conservative on a buying power, because I've gone through 2020, the COVID drawdown, where the market was down in 2 weeks. We were down 35%.
Right.
I did not get margin call because even now, right now, I'm using maybe 25 to 30% of buying power. Only COVID, when the market had a huge drawdown, that time my buying power shot up to 65 to 70%. And that is why I stay so conservative. And keeping an eye on the buying power and the portfolio beta weighted delta has helped me to manage risk and avoid these margin calls over however many, since 2017, I've been selling options. And you're right. If you don't keep an eye on your buying power, market corrects 10%, that's where you get killed if you are selling options. And that's where the risk lies. Right. People try to leverage their portfolio, basically try to consume all the buying power that their portfolio is giving to them and using that in doing all the trades. I don't do it. I could probably make more money and more return if the markets are doing great, by using more buying power.
Yeah.
But I will get wiped out if we get those COVID-like situations.
I survived the 1980s. Since 1980s, I've been doing the trading, and I've managed to survive so far.
So how much percent of your buying power have you used, Sri, all through?
I don't calculate the buying power. I need to start looking at that. I will start doing that.
So I guess this is off topic, but like I just suddenly realized when I sold a put option that the buying power wasn't used up. Is that true?
Yeah. See, it depends on what number. So it depends on a few things. Number one is what kind of a margin account do you have? If it is a reg T margin, regular margin, or is it a portfolio margin, right? If you have a portfolio margin, then the buying power consumed will be even less than the regular margin where you get for stocks, you get 50%, for, I think even for options, you get 50% or 30%. But lot of buying power comes from the long stocks that you hold, right? And if you sold a put option, let's say you hold a $500,000 worth of your long stocks, you sold a put option with strike price of $50, it's a $5,000 max risk, considering that you don't have any margin, it's a cash secured put. Like 500,000 and 5,000, you won't even notice the difference. So, but yeah.
I have a question for you. Around, do you do any kind of trend following? Earlier on, you showed, for instance, the strength in healthcare, but I didn't see really any movement in your positions that might correspond to that. So do you do any trend following, or is your portfolio more or less static?
I do not. I only want to invest individual companies. I want to invest only if I understand their businesses. So healthcare is going up, fine. If I were to take an exposure, I will probably take it through an ETF, but I do not jump on or do a trend following over short-term periods. So now I don't understand healthcare, so I don't have much of healthcare exposure except I think XLV ETF. But let's say financials, I know that financials should do well given the deregulations and the IPO markets coming up. So I've been selling puts on XLF. I do not understand what will drive healthcare, so I do not trend follow on healthcare.
Okay, thank you.
Yeah.
And if I understand Vivek correctly, the way of his investment style is the value investor, or a core portfolio that he has utilized. And most of his income is from options trading. Correct me if I'm wrong, Vivek.
No, you're right. Most of my cash flow will come from options, or let's say if I have a stock on which I sold a call because that is egregiously priced, and I will sell that stock, then that income will come from it. Right? For example, I sold a couple of stock on ASML. I came and talked about it because my call spread was in the money, so I generated that cash, moved it to my bank account to pay my bills. Otherwise, all these option premium that I sell, that is basically constitutes the majority of a cash flow that I need to pay my bills.
So and that again tells me that you don't have to be a momentum trader, or you don't have to be a trend trader, or any of that other nature of trading.
Must not be that. Because I think so Vivek's strategy to gain consistent option income works because if it's a sideways market last 2 weeks, for example, but let's assume next 3-4 weeks the market starts going up rapidly, he'll be essentially getting called or assigned on these option positions, right? So you would not gain as much as on those option premiums as you would have if you had just held stock straight.
No and yes. Number one is if a market starts to go up, I'll start to sell call against my puts. So there are ways you can manage it. And then let's say on some of the stocks that I have sold calls, I could have instead of a call, I had like on ASML, I had a call spread, right? Not just the call. So while for a duration of the spread, I did not make additional money. But then beyond that, my portfolio or ASML position continued to grow higher, right? So you determine in terms of how you want to play with this is either you, like, I don't sell calls against all of my position, right? That's why I have this coffee can concept, which will hold me, saying, like, say on this one, right? On SCSD, I say, okay, I want to hold on this, okay, 500, I always want to hold in coffee can, right? Or on Meta, 150, I want to hold always in coffee can. Right? So if I look at cockpit, so this is what I do. Morning I'll come in, I'll come here, and then I'll say, okay, looking at my coffee can and with my existing covered calls that I have, where do I have an opportunity to sell some income opportunity, right? So we just bought S&P 400, we bought 400 shares of SPY. Right now, I have not allocated anything to the coffee can. It says I can sell 4 contracts of SPY, right? Well, as if I go and update my coffee, where's my ticker settings? And so against all the, in my real account, against all the stocks that I have, I've already defined what's the minimum quantity that I want to hold of those stocks in my portfolio. Right, let's go and say SPY. I don't want to get called out if the SPY gets to 800. So maybe I'll say, you know what? I want to sell calls only on 100, like 25% of my SPY holdings. 300, I want to always hold in my portfolio. So now if I go back to copy and refresh it, it will tell me SPY I can should sell only 1 contract because 300 is sitting in coffee can. So I know where to sell, where not to sell. I know if I know this is, and if I look at my real account, I think 60 to 70% of my portfolio I've allocated it to coffee can, which means in a long term, I'm bullish about the economy. I want my 70% of portfolio to continuously go up. And rest 30%, if it gets called away at 10%, at 15% higher than it currently is, it's okay. It will help me pay my bills.
So is it correct that you saw most of your option premium income coming from these index cells like on QQQ or SPY? I don't have that ability to sell options on those, but I'm just looking at your record and it seems like you're getting majority of the income from those guys, right?
Okay, hold on. I mean, I can look into the analysis, right? Trade analysis. Hold on, I'm looking at
they give juicy $5,000.
No, I'm looking at my real account and looking at a, let's say, ticker month.
Rajiv,
so this is where, you know, basically I'm going and looking at it is, you know, ticker month. This is a demo account. So if you have, right now I'm looking at it, the maximum is coming from SPY.
Yeah.
Premium SPY premium is like close to 15K. Palantir is number 2, close to $9,725 in Palantir this year in 2026. Palantir has got a high IV and it does have a, you know, nice option premium. SPX is number 3, XSP number 4, SMH number 5, Tesla number 6, Shopify, so on and so forth. The biggest losses, and I know why that biggest loss is one of the NDX. And I have a lesson learned on that. And the second biggest loss is, as of now, it is Intel because I sold a call on Intel and I've been rolling that call. But overall, Intel, in considering stock and options, has done great. But because I've been rolling my call on Intel. Third is QQQ, the worst performer. Fourth worst performer is Amazon. Fifth is Google. From an options perspective, Google has been a great winner on an overall because the stock has gone higher. I've been selling option only on 25% of my holding of Google. So while I'm losing on that 1 contract of Google, the remaining one would have done much better. Right? So this is where I come and look at it. Okay, what perform, which strategy perform, top, bottom, and all that stuff. All right, time for a game. What else you want to talk about? Today's good. like I said, it's going to be a little light on education, but we want to play some game. What's the recommended percent of buying power to be used, Varsha? I'm conservative. Number two, I do not have other source of income. So I want to use it if the market is where it is currently, right? It's high, little euphoric or bullish, near all-time high, maybe 5% down all-time high. I want to not use, and if you're selling options, then I want to stay conservative, use maybe max 30% of my buying power, right? And to give myself a room that, let's say if the market corrects 5%, 10%, I will start go and sell a lot more premium, right? And I want to give myself a room that if market corrects like 30% or 40%, I don't get margin called. That's why I stay a little conservative. There is no one recommended buying power. Let's say if you're only doing spreads, then you will not see any buying power expansion. I do naked options. That's why if the market goes down, my buying power will explode. But if you're only doing spreads, then you can consume 50, 60%, and maybe keep 40% for your, if the market corrects, you want to add more trades. But if you are doing naked options like me, I do, a lot of other, you guys do it, then you have to keep an eye on your buying power. Make sure that, you're not consuming too much because it will explode if the market's corrects. And the moment you get a negative buying power, you'll get a margin call. And then the brokerage will take a decision on your behalf, which is never a good situation to be in.
So do you think, I guess you have a house, right? Do you have a mortgage? Do you use like money against the mortgage?
No. Yeah, I do have a mortgage. I can pay anytime, but why I want to pay? It's like 1.99%.
Okay, so then you are kind of playing with money which should rightfully be paid off your house. Essentially, you're essentially kind of exposing that capital as well to the
No,
riskiness.
so I used to pay off. I used to do early payment as long as my interest rate was higher than Treasury. In 2022, the moment Treasury started to pay more than my interest rate, I stopped doing any early prepayments. Only stupidity. I can invest that
Now,
money
of course,
in Treasury, zero market risk, and then just get free money.
yeah, I'm
So if the
considering.
Treasury rates decline, I will start to maybe prepay some of my house. I don't know. Should I have? It's like 1.99%. So it's I'll okay to let it go its own course. If there's nothing else, maybe we use this 15 minutes, like Naresh was saying, for a demo. Is that okay? Or want to talk about something else? Okay. I think I have on the demo account, I think most of the stuff is enabled. All right. So first of all, anyone else here who had signed up for on the wait list and has difficulty in accessing it? Couple of you messaged me. I've responded back. Hopefully you're able to get in now. So this is first thing you should do. Once you get in, you'll get a welcome screen which says, hey, this is okay. I see a message, Sudhir. Can you give me your email ID with which you have registered? I'll just recheck it. And see, I think there were more than one email IDs. But I've enabled both of them. Okay, so Nita, maybe yeah, you can put me in a DM if you don't want to share your email ID, which is perfectly fine. Just DM me the email ID, and then I remember I've enabled both of them for getting access, so you should be able to get in. But anyway, once you get in, yes, it has got access to it. So you should log in with this and click on So basically, if you log in on optiongrid.com with the email ID, you will get syncing tab called Access-Optalyzer. And you should, once you click on Access-Optalyzer, you will get into the tool. And if you have never, if it is the first time, you'll get a welcome screen, which will basically tell you about what the tool does. And the first, give you some screens of the different functionality of the tool. But first thing you should go and do it here is add your brokerage accounts against which you can record your trade logs, etc. So go add account, select whatever the brokerage. If the brokerage that you deal with is not listed here, just shoot me an email and I can work with you. But Tasty Trade, Schwab, E-Trade, Fidelity, all those have been enabled. Whatever, put your account name, etc. here. And
the people we have Robinhood.
yeah, then just send me a note saying, hey, there's a Robinhood, because I don't have access to account with Robinhood. Then I can work with you to build it for Robinhood and then give it access to Robinhood, right?
Yeah, the Robinhood doesn't have a lot of good integration for sure. Yeah, we'll talk more.
Yeah. Right. So once this is done, then the next thing you can do, if you want to upload the historical data, you can come and say upload the CSV. You select whatever E-Trade and give the cutoff date on when you have downloaded the CSV. An E-Trade has got two separate CSVs. One is your transaction history. Another one is the current positions, right? If you want to track your historical performance, if you don't want to track your historical performance, you can ignore this. But then you have to continuously copy and paste the trades here. Even if you don't want to do anything on your trade or manage, let's say you don't want to know your historical performance of your option trades or your ROI, etc., you can still make use of it for research purposes. You can come and use the stock analysis research. Let me go through those first, then I can come to the trade analysis part, right? So on the stock analysis side, we talked about the framework on how I look at various companies. And so let's say if you look at Apple, tell you what some information about Apple. Second thing, is it a good business? And I evaluate based on various parameters: profitability and the moat in its business, revenue tailwinds, real cash flow, capital discipline, and the quality of the balance sheet, right? So this is all based on historical data. It's all based on past data. I'll look at last 15 years of financial information and then come up with the score. Right? If you want to get into the details of it, you click here, you see the details of 15 years worth of data. Then some of the financial metrics in terms of their revenue, operating income, net income, free cash flow per share. Anything else you want to track, let me know. I have a space for 2 more. Then comes around some of their business metrics of the company. Let's say you want to know how their iPhone sales have been doing. You can look at, say, how their iPhone sales have been doing, right? Or services, which has now been growing like crazy. And this will tell you how their services business has been growing. It's almost $100 billion plus. It is $100 billion plus business in 2025. Right? Services going like gangbusters. More importantly, what I look at it, and of course, it'll tell you about the cash flow to the shareholders, how the balance sheet is, what the insider information is, latest earnings report on this particular stock. If you see that for the stock that you're interested in, the latest earning report is not there, just shoot me email. This is still a manual process in which the team has to go and then generate a report for this. Right? And then you can read your full analysis of that particular report, right? Looking at executive summary, strategic teams, guidance, capital allocation, deep dive, bullish, bearish thesis around on this particular stock. This is where if you are focused on valuation or pricing, you can have both ways. This is the reverse DCF calculator. You can search how to use this basically in this one, this is currently telling me that free cash flow growth of 14.9% for next 10 years and terminal growth for 3% is reflected in the current price. But if you think, no, probably Apple is gonna, so analyst estimate says they're gonna grow their revenue by 8.5%, EPS by 10% over next 5 years. You consider that same trend to continue in next 10 years, but you want to be conservative and say, they are growing their EPS by 10%. Last 5 years, they've converted 103% of their EPS into free cash flow. Maybe I'll be conservative and say only 80%. So I'll tell them they'll grow only 8% free cash flow next year. Then I'll tell you the intrinsic value is $184. Current price is $308. It means a lot of a future growth is being priced into this stock. But if you think that they will continue to generate or grow their free cash flow by, let's say, 10% because they're growing their earnings by 10%, then I'll tell you the estimated intrinsic value is $214. For me, when I look at this is how I decide what delta should I sell a covered call, or how I would say, or how many covered calls should I sell, or a call spread should I sell, depending on how much is based on the last years of the financials versus how much is in the story, right? For me right now, I'll be okay to, sell a covered call on Apple, and I'll pick up, let's say, 310, 315, because right now already a lot of growth is priced in Apple. Or if you are a pricing guy, which I am not, if you're a pricing guy, you can put your low, medium, high estimates of how the revenue growth would be, where do you think the profit margins would be, and what the multiples would be. And then it will give you information on if you want these numbers, then your buying price should be 84. If you want these numbers, then your buying price should be 151, right? So in this case, you give your thesis about Apple and what your hurdle rate would be in low, medium, and high. And it will tell you if you buy at a current price, what's your 10-year CAGR? Or if you want to make your hurdle rate, then what price point you should buy Apple at. Right? And then you can decide how you want to sell a put or you want to buy the stock. It's entirely up to you. You have to give your thesis about Apple, then it'll tell you what the price points you should be buying at. And then there's some latest news. I know I spoke a lot on this one. If you search on YouTube, there's a decent literature around how to use these tools. What does the reverse DCF mean? And I think the pricing multiple is the most commonly used. Even on the analyst, you will see analysts talking about multiples in the future is going to be 20 instead of 20 is going to be 25. Put your numbers, whatever your thesis is, put those numbers in, and then it will tell you what the return you're going to make. The other new thing that we added is a watch list, in which you can go and create your own watch list, etc. So by default, whatever is your portfolio, I will already show up in your watch list. So this will give why I want it that way. It will tell me immediately what I hold in my portfolio, right? How many exceptional businesses do I hold? How many of them are high quality? And, the different, based on my quality score. And then I could look at their performance or financials, the profitability metrics, have they given dividend or not, etc., etc. There are 2 watch lists which are available by default, S&P 500 and NASDAQ. You can create whatever you want to. I have a few watch lists, country ETFs, Max 7s. Max 7s are all decent businesses. If you look at it, except the Tesla and Amazon, because of a retail, is not as great as a business, but there's a lot of AWS story, which is driving all the valuation. But otherwise, Apple, Nvidia are pretty decent businesses, right? Similarly, you can, create whatever. I have energy, solar, pet industry, and all that stuff. Third one is around a 13F analyzer, right? And we also did an announcement this week. In this, so currently I'm tracking close to 116 funds, right?
Do you have this guy Michael Burry's fund?
Yeah. But no, he won't. He doesn't manage. He closed his fund, right? So he's not getting his sign management anymore. So this is based on Q1 2026. The most of that $70 billion are still committed under Apple. Out of 112 funds, 59 funds still hold Google. That's the most widely owned. Right? Biggest new buys was S&P 500, 5.92. Second is a Sunbelt. That was surprised. What is a Sunbelt? And it's a $5 billion held by 14 funds under Sunbelt. If you want to, when I was going through it, I said, okay, I want to add this to my watch list. Add to watch list, which says, okay, create a new watch list, 13F, Q1 2016. So that when I'm reviewing 13Fs, I can go and add it to my watch list, and then later on I can go and review that watch list, right? The dots tells me that these tickers are already in one of my watch list. If I want to add it again, that's fine. But if I click on it, it will tell you it is in Mag 7 watch list and cybersecurity watch list. Right? Okay, that's good enough for me to track. These blocks will tell you this is the biggest new buys where the new money is floated in. These are the most buys, means either new or something that you've added. Right? How many funds I've added? So 30 funds either bought S&P 500 or they added to their either bought Microsoft or they've added to their existing positions in Microsoft. Right? This is top $10 committed. Maximum is with Apple. This is Amex. Amex, I think it's going to be Berkshire Hathaway. You want to look at the detail, just click on the ticker. It will tell you Berkshire Hathaway has 4.5 billion. Then, 45 billion. Out of 46 billion, 45 billion is Berkshire Hathaway. Then the other asset managers. Same thing here, most widely held, Microsoft is held by 57, Google held by 59. You want to see which funds are there? Okay, I don't have expansion on this one. We'll have to see. More importantly, what I like is around the themes. So we have various themes already defined. Let me open this a new view. So by default, I have a lot of themes that I've defined based on, looking at this for past many years. Advertising tech, big retailers, Chinese stocks. So rather than looking at an individual stock, what I want to look at is how the funds, the smart money collectively is moving in and out of a theme. Because when you look at an individual stock, it doesn't give you information on maybe they sold a similar stock and then bought a same stock in the same industry. Right? Then it means there is no net increase in the exposure to that particular theme. I want to track at a thematic level how the Wall Street or the so-called smart money is moving their money in and out. So there are various themes that I've already added. The most recent one I added was a space economy. Obviously, there is nothing on SpaceX. So I have ASTS, oops, should be a comma. So I need to fix this. Rocket Lab, SpaceX, right? Of course, there's nothing in SpaceX in Q1. Only we had was a Rocket Lab. And let me just fix this theme. ticker, it should be ASTS, comma, LUNR instead of dot. Then it should work fine. With comma separated values. All right, let's refresh this. Where's my theme? So now I just fixed it. If you go to space economy, you should see ASTR, Lunar, Rocket Lab, SpaceX. So this is the fund manager exposure on this. If you want to track it, this will not save, but if you want to track another one under space exposure, I don't know, Boeing, you say add this for your view, it will tell you, okay, bring up all the fund managers who have exposure to Boeing. You can add 5 tickers temporarily. You don't want Boeing something else, delete it, add a different one. Right. What else? So we talked about summary, and then we have a funds overview, which is, this is basically, you can find it on many other websites, looking at a particular fund and then see, okay, what do they hold in various this quarter. So I'm looking at Atreides management. They added positions in Bitco Holdings, Taboola. This is Q1 2026. You want to go back and look at the previous positions, knock yourself out. I generally look at the latest one. Only time I look at the previous one when I want to see whether they're building conviction or they're losing conviction. That the current one doesn't tell you anything about the conviction, right? It tells you what their today's stance is. What I'd be more interested is sometimes is go back and look at the quarter changes. We'll come to that. But let's say you're looking at Atreides and you're looking at, oh my God, they own QQQ puts. Wow, became bearish on QQQ. Estera Labs is their second biggest holding, which is 7.38%. They almost doubled their holding in Q1. Right? You want to see who else hold Estera Labs? Click in here. Now it will give you a view in which you provide a ticker and will tell you all other funds that hold that. I use this a lot more because I want to see the funds that I hold, who else hold it. So Estera Lab is held by Gotham, Bailey Gifford. They have the maximum allocation. So if you want to read the investment thesis, go and read Atreides' investment thesis. Soros sold out of Estera Lab, whatever, and Bridgewater increased their position by 200% on Estera Lab. I see there is a ticker called SCHD. So let's see who holds SCHD. Oh. So SCHD is held by very few people, right? And there is a reason, right? These fund managers generally would want to hold individual stocks. So SCHD is not widely held. So here you can look at an individual stock. The other interesting is this. When in looking at a particular fund manager, let's say we looked at Atreides and we looked at we looked at their and I want to compare how they have moved their positions. So this will tell me that Estera Lab, it does tell me that they were increasing conviction. They added Estera Labs in Q4. They added it in Q1 as well. Now Unity Software, even though it is, they have a $32 million position, their conviction has been waning.
So Estera got added to the big index, S&P or NASDAQ in the last one quarter.
Maybe that's the reason why they added it, right? A Micron, I've been buying and selling, right? So Micron Q3, they went big, almost 10x. And Yeah, they continue to stay bullish on Micron. I want to see who else is playing on Micron. So let's create that separate one. NVIDIA, they sold off NVIDIA down like more than 1/3. Lumentum, their conviction is basically reducing on Lumentum, even though they hold $187 million. So I generally look at a QQQ changes to see have they been building conviction or they've been reducing conviction. And this also tells you when some of these fund managers come and talk on financial channels, you can come and actually verify, are they BSing over there or do they have money behind this? And I can't tell you, many times I've seen them coming and talking, about a company, but, in positive terms. But when I come and say here, I'm saying, dude, you've been reducing your exposure. So if you are selling, then, why are you saying that it's a great company? Are you trying to create a bag holders? You want retail investors to start buying it so that you can sell it at a higher price? So I look at it. That's why I find that useful. Any other question? If you have a question, yeah, just let me know. Okay, so we already looked at this stuff. Thematic views we looked at. We need to look at who else owns MU, right? So this is MU, and Appaloosa, David Tepper reduced, but he still got 9.48% of his portfolio in MU, and that's got he has the highest percentage allocated to MU among all the fund managers.
When did he start adding to Micron in a big way? Can you tell from your 13F reports?
Yeah, we go to let's look at QQQ changes for that fund manager. What was it? Appaloosa, right?
Micron. Tepper.
Yeah, Tepper. Micron. He started its first time at Q2 2023. That was the position was initiated, 1.4 million shares, reduced, then doubled in Q2 2025, and then almost 4 times in Q1 2026. This is how David Tepper has been moving his shares.
This is useful too.
But if you want to look at MU, who else and how they have moved? So MU, say you want to see all the smart people who've been talking about MU, we can figure out how they have, Micron. I mean, what happened? There are a lot more Micron technology. This will give a lot bigger picture around every fund manager and how they moved in and around Micron. And, you can look at for any other ticker. Now, sad part is these guys, right? So this is what Brad Gerstner will come and talk a lot about Micron. He exited position Q1 2025. Never added.
That's unethical. Basically, this is why if you know, like 99% of people who are managing money professionally, they don't hold a CFA. Why? Because CFA has a very big emphasis on ethics. And every year you have to be certified, and these guys would get disqualified.
So I have seen them coming and talking about Tesla FSD 13 or 12, whatever that is so great and all that. I'm coming to look at the 13. I'm like, dude, you already sold your position.
If you have a CFA charter, you cannot be hired at Goldman Sachs for equity trading. Did you know that?
So this is what helps me, right? Hey, who are, and sometimes I feel third point LL, third point. This is Daniel Lowe, right? He had a decent position. He exited it, and a lot of us smart people exited just before Micron took off. And so this is really helpful if you're looking at a particular ticker. Like I look at and see who is, because I hold
Bridgewater,
Uber.
Bridgewater, you were showing 52,000% up. Go back to the previous screen.
That might,
No, Bridgewater seems to have added 52,000% more.
yeah, so they might have like they might have a very few shares, right? So,
oh, I see. Because that's a conservatively managed company. They have this all-weather portfolio, which is
oh man, I've seen Bridgewater, and this is what I realized once I started looking at this. Many of the funds that I thought are like long term, I see that they're moving in and out very rapidly. So Bridgewater, they had 1.7K shares. They made increase it to almost 900K in Q4, and then almost added 70% in Q1. So they are still big, and they exited their position in Q4.
I wonder if these folks knew that in Q1 of this year, whatever you're showing, when they increased their sizable ownership in Micron, they knew that Micron was striking these long-term 3-year contracts, pricing contracts, because essentially Micron is price gouging, and somebody must have known about it. Somebody must have known about it. For Tepper to go in so big, he must have known about it.
Who knows? So anyway, so the other view thematic we already looked at, and but what I like is this one, especially on the heat map, is how against each of the themes, how the money is moving in and out of the theme level, and more importantly, how is the money moving in and out of your own portfolio, right? Like I own portfolio, but then the Wall Street is not interested collectively in all the tickers that I hold, then I'm not gonna then you don't get the catalyst for the stocks to move, right? So it will be sometimes helpful that, hey, is the smart money moving out of the stocks that I'm holding collectively as a portfolio, right? Individual stock is fine, but this is the collective information. So if you look at a Max 7, this is the total dollar value. Max 7 dollar value in Q1 2026 was $235 billion. And we are looking at what, Q2 2022. Now you can go back a little further. Let's start with Q1 2022. So you can run your numbers and to see which theme has worked out, which theme is not. So clearly space economy is up 3,000% since last 4 years. SaaS has been down 63% in terms of the amount of a AUM under these funds. It used to be $53 billion and now sitting at $20 billion, $19 billion, right? So this will give you information of how the money is moving. Now, surprisingly, when did Donald Trump join? Q1 2025?
Well, November 2024, it was confirmed
It
he'll
was
be coming in.
confirmed, right?
And I would say by September, October, it was known to the financial markets. They were betting very strongly that he'll come in.
So let's look at a clean energy. The total amount since Q4 is down 30%. Dumb money has performed really well. And I said dumb money means that the tickers that are dumb money are basically more retail investors' favorite, right? Oaklawn, ABS, Iron Hood, HIMS, Grab, so on and so forth. So this is another view where you can look at how the money is moving in and out of various thematic level, right? Basically kind of a heat map. So that's all on a 13F. And next, then you have these reports, but okay, like ticker analysis will tell you, pick any ticker, TSM. Right? It'll give me all the stats around how many shares you hold, how many trades you have done in 2026, go back to 2025, and how much you made, if you added your comments and all that stuff, because after every trade I put in my thesis, it will show you everything. how many were winners, how many were losers, how many you closed, what's your average cost basis, what's the coffee can that you have allocated, and how much covered call you should be doing it. So let's say for TSM, I've allocated 200 for coffee can. If I've allocated 200 for coffee can and says 180 shares I hold, means I shouldn't be doing any covered call. I shouldn't letting my shares go if I want to always want to hold 200, right? And this will tell you total trades done, win rate, how much profit, and unrealized stock profit and all that stuff. But for this, you need to have all your history, etc. Trade analysis we already looked at. This will be useful for those who are active option traders and all that stuff. Right? You can go and look at either any year, right? Let's say I want to look at this year. If I have multiple accounts, we can select which account we want to look at, right? Tell you how much you've done on option trades. Say this demo account, 632 trades, total premium sold. The best P&L is NDX, SPY. At an expiration level, which month paid what? You click on that month, you get the whole detail of all the trades for that month. You can slice and dice. I think I probably slice it as in all the ways that is feasible to give me all the information that I need. The two biggest reports that I always look at is one is your P&L calendar. Right? This is what will give me a calendar view of, let's say, 2026. Total premium, option premium retained is 95,000. Means this is the based on the trades that I've closed. Right? Worst day was 422. I lost $12,000 in option premium, and it'll tell you a month-wise exposure. If you want to look at, sorry, this was all. If I want to look at only options, click on only options. It will give you data based only on options. You want to look at, and this is what I looked at is of all the years that I have data for, on my own account, I have data since 2017. To really look at options, which month, what options were, what were the worst month, etc., etc. Then I can double click and see, oh my God, this was really bad month. What the heck I did? I can get to at a trade level that contributed to that worst month. The most recent addition has been, let's say, looking at a ticker level, right? So, which is to know how Meta has done to me across all these years in option selling. So on this demo account, I have $700,000 I've retained on Meta across all the years. Now you want to say, okay, what the heck I did on June? You can get into June 18th, some trade you closed, you can go and look at it. But this will give you, and number one, it will tell you that you don't reduce your cost basis on one particular month or one particular year. And sometimes it takes you years to reduce your cost basis. Now, let's say, does it tell me how much Meta I hold? Here, not in this screen, right? But let's say if I hold 100 Meta shares, or then I've already reduced my Meta cost basis by 78, right? And or if you want to look at your stock buys and sells of Meta, it will tell you what's your individual P&L is. The other thing, those who are full-time into this, I want to track on my daily income, right? On how am I doing? Is it really worth spending time or not in trying to actively manage, right? So it says average per active day, $822, median, sorry, $826, $800 per day. If you are able to reduce the risk, is it really worth or not? I mean, you can decide. So this will give you a daily ledger on how you're doing on your daily total. So the best day was 618, right? Whatever, $8,000 worth of income. Again, worst day was 422. We already looked at, right? So I want to start it at a date basis and see how we're done on each date and on a different strategies. So that's is your, and then these are the cost basis reports, which will tell you how the cost basis is reported by brokers, which is an attributed basis. And what I am interested is on a cumulative basis, right? On Meta, I have gotten $7,000 premium. So what's my net cost basis as a trader, if I think I can get here, but it needs to have a history of Meta, right? So that it knows when you bought and when you sold. In this demo account, I don't have complete history, so it can't find it. But on my live account, I have a complete history uploaded, so I know exactly what my net cost basis is. This, so then I know, okay, many of the accounts I am playing with house money, or I've already reduced my cost by 60-70%. So it's okay to hold on. If the stock has gone down 20%, it's still okay. Right? It helps me to hold the stock for a longer term if I have that information. This will give you option trade log. And this is important if you're trying to look at, sometimes I look at in terms of I've rolled certain trades. I don't know if I have that in the demo card. I don't think I've rolled anything. But if I'm rolled some trades, that's like I've done something, I can go and look at the details of it. I don't think I've linked anything, so it'll give me only one. But if you have rolled your trades, it will tell you the series of trades that you have rolled, right, one after another, and say this is what your net premium is after all the rolls, along with the history of each of the trade that you have done. You can come and look at all of your trade, all accounts, symbol, each strategy wise, and then you can dig deeper in filtering and all that stuff. This is the new one that I've not enabled it yet, which is basically to track the performance, right? On which accounts you want to track it. You can select a particular account or all accounts. I don't know if I've added the dummy data yet or not. You can select what your benchmark is. You can see whatever 1 year, 3 year, 5 year period, and then you can see your performance. Nope, I don't think it. I was just working on it. So on the demo account, I have not added the data yet. But what I do and what I've been tracking for the last many years is my end of a month balance. And all now I need to do is, I actually didn't want to do that exercise anymore on my Google Sheet. So that's why this week I'm like, I need to move this to Optalyzer. I can get rid of all the Google Sheets. I basically track the balances at the end of every month, right? And then I can come here and say, okay, end of July, this is my balance for all the accounts, right? And then the other thing that I track is money moving in and out of account. If I'm from my bank account, I move money into my investment account, and that I'll track it here. I'll say, okay, this is the date, this is the amount I moved, and why I did it. Once you have that, you'll be able to see your performances and compare it with whatever benchmark you want to compare with. And let me tell you, it did give me some surprising information, which makes my belief stronger and stronger that don't try to beat the market.
I got a question.
Yeah.
Is this based on what you loaded already, or is it real time? Can I link up my account and monitor this the way you're showing us?
So right now, it is not, you're not, I don't have a real linking of your live accounts in this.
Yeah, so it is based on what CVS I have loaded on maybe 2 weeks ago or so.
No, this one, because we don't look at the balances, etc. in your CSV file. That was only just for the trades. This basically, I've been over the years on Google Sheet, I've been tracking my end of month balances across all my accounts. So I just came and uploaded all of them, for all the previous accounts because I already had it. I have created a utility to just extract that into a CSV and upload it into it. So, and then it can give me generate how I have done from a performance perspective.
Yeah, I can look at performance on my account in real life in the account itself. But
Yeah.
what you're showing is a lot more than what I can see on my account or real-time account. So is there any way in future that we could link or I could link my account to this site?
So I would rather do it because uploading the CSV is such a pain. But people generally, I've seen people not being comfortable in sharing. So the easiest one would be for me to sign up with the Plaid. And I've worked in this industry, and then you can link your real account. It'll pull in all your account information and transactions, everything. But that's what my phase 2 would be if I see more interest around that. But generally, sometimes I've seen people not comfortable in sharing their API credentials or their sharing their credentials so that we can pull in the real-time information. So if you are not willing to share that, then you have to provide me the information. But yeah, that's something on a phase 2, which I can directly integrate with an API. Right now, I'm just testing on my account with a Schwab. But that's my phase 2 is to do a real-time integration.
Yeah, I have account at E-Trade, but I can't get all this information, like you say, rolling. I can see my current loss and all that, gain and loss for the week, per month, or whatever time period I choose. But in real, and it changes every time I make any trade. So I had to log on into my account, go to that page and look at it. But if I can do it here, it'll be great.
And the worst thing is that you cannot track it like across your accounts, because for me, I have 2 brokerage accounts. But when I trade it, I want to, in my mind, it is just one. And I want to, it's okay for me to lose money on one and make on other. So what I want to do is to trade. And I think so I just implemented saying you can create a group called retirement, or let's say active trading, right? And I say, okay, put these 2 accounts in active E-Trade, Schwab and E-Trade in active trading. Sorry, the UI is not refined yet. I just worked on this week. So, but on my live, I've created a group called active trading, retirement, and then like kind of inactive. And then I can go and look at my performance on the accounts that I don't touch, accounts that I actively trade, and, or at an individual level. So in this case, so this, I can't do it at my individual brokerage because they don't have information about others.
Yeah, Fidelity, I haven't used it recently, but a couple of years ago, you can import all your external accounts and you can figure out, but that was very limited. And
I know because I was managing Fidelity, they were using the product that we used to sell. It's called Full View. It's called Full View. I worked.
Right.
Fidelity was my client. I managed them for 6 years. They used to be pain in the ass, but hey, client is client. So that Full View is a product that we have built. I worked on that company for 10 years.
Okay.
Yeah, so I understand. I've worked with their whole Full View team and all that stuff. But again, the moment I left that company, so that product is good enough only if you are at a personal finance level, want to do budgeting, want to set a goal and all that stuff, want to know your net worth. The moment I became more serious about investing, and we still joke with my ex-colleagues who are still in the company, dude, I can't even use the product that I built over 10 years because that is so basic for a DIY serious investor. So I'm like, I have to build on my own. That's an account aggregation product that's being used by many companies. Fidelity used as Bank of America, Citi, these are all customers that I managed it. Mint used as before the move to Intuit. So So I understand, I've seen that space. But I realize that none of them actually do a good job for a serious DIY investor, especially if you're in options. There is no other brokerage firm who does it. All right, so yeah, so this is I think, yeah, these are the things that we have. We probably add a few more, but I think there are one or two things that I still have to migrate from my offline system onto online before I call it as okay, done. So sorry, that was hopefully this demo is useful.
So it is anything where you can add on additional on the tax side of it?
No,
Like
I don't want to get into the taxation.
No, I meant to say like not the tax on it, but it's just a way to so that people can manage their withholdings and stuff. So like if you have a DIY investor, basically your taxes, you are not sending the money to the IRS checks. So how do you come up with your number and how do you send it? How do you keep track of that taxation side?
Well, but the idea that is available on your ADPs or any of those already, right?
Not for the option income, not for the tax stock income, which is on your own. You have to do it.
Yeah. So the reason I think earlier also someone asked the question, is am I gonna see the same P&L in my brokerage account? I'm like, no, because I don't know what method you might have chosen, taxable tax loss method you might have chosen, right? In this case, it's all, let's say stock is all first in, first out. Right? Number two, the tax situation and the numbers will be different based on whatever your slab, etc. is. So that's why I didn't get into the taxation part of it because that becomes too complicated. Then you have to worry about the tax lots. Then you have to worry about your, because let's say in Schwab, you can actually allocate an individual tax lot to a particular trade, right? You can do over there, but then I need to take care of it over here also. So that's why for now I stayed away from a taxation part of it. Become too complicated. But
on
lowest hanging fruits.
Yeah, so, on E-Trade you can do it. You can use HIFO or FIFO.
Yeah.
I used to use FIFO. Then I realized I had to manage and change the lots on Monday. I said, forget it. I'll just go HIFO. If it's showing me loss, then I'll go and change it. So I don't have to get into the wash sale headache.
And on a Schwab, there's something called optimized tax lots. So I think it actually looks at which is your highest cost basis. And first it exhausts from there. Kind of a HIFO, I guess maybe it's kind of a HIFO, but they have a HIFO as well as FIFO, LIFO. There are a few options over there.
So, I've been dealing with it, and they had some web issue. So say I had to monitor every Monday morning, change it, and verify it on Tuesday again. But that problem has been resolved, thank God.
All right, so the last part I didn't touch was this cockpit, which gives me, especially if you're active in option, guys, will tell you what's the option expiring next 21 days. I know June 17, I have these few contracts which are still open. TSM will be reporting earnings. August, this income opportunity already looked at. This is the in the money risk. Basically, I tell that if a stock is 5% near my strike price, then mark it as, as a in the money risk. So all these trades are in risk of being in the money with my threshold. Cash flow as assignment. This is something which I desperately wanted because I don't know if I get assigned on every stock. Am I running short of a cash in my bank account or not? So I don't want to get surprised. So this will tell me by July 17th if I get assigned on all of my option positions. Airbnb looks like a call spread, so I will get money, but XL is a put spread. I have to pay money, so net will be positive. If you are selling a lot of puts and you don't know how much cash you need to hold in your account to honor that in your, if you are a margin, that's where this is more important. Then this is helpful. And there's some more information about premium, etc. Last one that we didn't touch was around closure analysis. This is another screen which I always keep it open. Is okay, I have these many trades open. If I have to close this trade at 60% max profit, then I should be putting GTC order at 1.06. If currently it is value is 1.50, it means I'm making 43% of max. Shall I close it? If yeah, I'll go to I'm basically on my think or sim, I'll just put 1.50 and close it. And I'll come here and say, okay, I paid 1.50 and whatever the stock price was at 142 and I close it. So now this will add up into my profit and loss and update the trade analysis and everything else. That's all. So, and this also give you a bird eye view of, okay, how much of a premium is open for August, how much premium is open for T+2 months. Right. So that's, and if you want to look at a particular account, all accounts, you can do all that stuff. All right, guys, it's already 4 o'clock. As all, yeah, if you need help or if you're getting stuck anywhere, like I said, I do open a Zoom session. I continue to do my work. If someone joins, that's fine. We had a few people joining in and, clarifying some of their questions. Join in here, or you can just send me a note through this, and I'll respond to you on email. Or you can join these office hours, and we can have live discussion. I can get into a breakout room with you to help you if you are stuck somewhere. Cool. All right. If nothing else, so if you still don't have access to it or finding it some issue, just shoot me an email and I'll make sure you get access to that. Play with it. If nothing else, add your trades or history. That I was surprised on some of the insights that I got. Like today live, I got surprised that I hold LMT in my portfolio in a much bigger percent that I should be tracking it as an individual company. I should be reviewing its earnings, which I never done. But that's what it's for. All right, guys, thank you very much. Again, wish you happy 4th. Have fun. And we will talk again next week. Meantime, I'll have the Zoom session open during the office hours. Jump in. Cool. Thank you, guys.